And that's the story of how Ryan Cohen turned around a dying brick and mortar company against all odds. Or is it? In today's video, we need to talk about what just happened with GameStop, why it just sold off about 18%. I know you all saw the move, and that is probably why you're here watching this video. We're going to talk about what happened with GameStop earnings. Was it positive, or was it something that we didn't want to see? Was it something short sellers wanted to see? Are we moving in the right direction, or are we moving in the wrong direction? We're also going to talk about what happened with the stock price, because we expected this, and we also talked a little bit about it in Discord. So without further ado, guys, hit the like button on the video. I'm going to break everything down for you. Let's get into it. Okay, so GameStop closed today at $15.50, and after hours dropped to where we're trading at right now, around $13.20, which is down about 15%. And you can see this ugly move in the chart on the 4-hour time frame. Now, there's a couple things to note. This is coming down and got a perfect bounce off of this bottom demand zone right around $12.60. So that's a beautiful bounce from where we saw it. But is that validating anything, or is that invalidating a move down, move lower? Not necessarily. Because one of the main reasons we expected this move and anticipated GameStop to go down is simple. If you take a look at the previous earnings or the previous cycles, you can see this wick up back here and then a nosedive lower. And if I bring in the cycles, this is the same exact time frame where we're trading at right now. With what we've been tracking, it tracked to a T. Chopped in this channel, got that wick higher, tested the macro, and broke down below. GameStop, same point in the cycle, broke higher, coming into earnings, so we anticipated a move lower. It was really that simple. If it climbs into earnings, chances are you're getting a move lower. If it gets a move down into earnings, chances are you're getting a move higher, but you have to evaluate even further. On top of that, GameStop was testing the weekly trigger, and short sellers really did not want that to break above. It would have been extremely bullish for GameStop stock, and you can see how well they defended it. The previous time they defended it back here, you can see GameStop sold off for quite a bit, and this just happened once again. It tested it for a second time, faking that it was going to get a break higher, and instead it got a move lower, and shorts defended this line like their life depended on it, and that's probably because it did. Okay, so enough of that. What happened with the earnings call? Was the numbers negative? Were they positive? The first thing I wanted to note that is going to piss off retail investors is a lack of an earnings call once again. So apparently there's going to be a shareholder meeting, whatever, but the forward guidance to shareholders is just not there. And I think Ryan Cohen should have came out at least on Twitter and mentioned something or said something, and it's not too late for him to do that, but as of right now, it's not a good look for retail investors. Okay, so GameStop faces unsustainable sales decline, cuts jobs to control costs, tumbled on big earnings miss, yada yada yada. Okay, so here are the numbers. Here's an exact breakdown of what happened. If you look down here, you can see net income was $6.7 million for the fiscal year of 2023. So GameStop was profitable, and this was compared to a $313.1 million loss for the fiscal year of 2022. If they were this profitable, why are they going down? There's a problem with this. They structured their company a little bit better, but the breakdown is a little bit different. GameStop made $1.794 billion from selling games, consoles, and other products, which is less than the $2.26 billion they made during the same period last year. Okay, so if you look at the GameStop numbers, their net sales were actually not good. They actually were down quite a bit. I believe they missed on EPS, and we're getting to that in 1 second. The company spent $359.2 million on things like paying employees, rent, and other running costs, which is a bit less than the $453.4 million spent last year. This means they were a bit more efficient with their spending. Usually only 20% of their sales come from income from these expenses compared to 20.4% last year. So they ended up making $63.1 million in profit, which is more than the $48.2 million in profit from the year before. So even though they made less money overall, they kept more of it as profit this time. At the end of the period, they had $1.199 billion in cash or investments that can quickly turn into cash, ready to use for whatever comes next. So this is a solid thing to see as well. Their only big debt is a low-interest loan that doesn't require collateral given by the French government to help businesses during COVID-19. So this is a beautiful, beautiful thing to see. Last but not least, here's a quick overview. For the entire year, GameStop also shared how things went financially, and here's the easy-to-understand version. And shout out to InvestorTurf for posting this breakdown for us. Over the year, GameStop made $5.273 billion from everything they sold, which is less than the $5.927 from the year before. They spent $1.324 billion on running supporting the company, like staff wages and stores. The spending was a smaller slice of their sales pie at 25.1%, which is better than the 28.4% since last year. So this time around, they also made a profit of 6.7 million for the entire year, a big improvement from losing 313.1 the year before. They also reported something called adjusted EBITDA, which is a bit like a report card on their financial health, showing $64.7 million. This is way better than the negative $192.7 million from last year, meaning they're doing much better financially. So my breakdown for GameStop: was this move down justified? Absolutely not. GameStop structured themselves and figured out what they had to do to cut costs, save money, and essentially be profitable. And they did, and they came out on top. Was it concerning? Yes. Their net sales are down. They're going to have to figure out something else in the near future to continue to innovate and grow the company. So it is concerning. I don't think that the drop is justified. I think if anything, this should have been a stagnant move around $16, and GameStop should be slightly green, or move up to $18. And this is what would happen in a normal market. But essentially, that's not what we have. We have a manipulated market. It's a terrible market. And tomorrow and the next day, we're going to see short exempts on the rise. I guarantee, in my opinion. Nothing I say is financial advice. I'm not a financial advisor. But you're going to see them drop a ton on this. There's not retail that let this go. This was a fake sell-off to the downside. Where GameStop is going to go from here is something that you have to tune in for tomorrow's video. But as of right now, I'll show you some screenshots. We called this out in Discord. I post my positions as soon as I take them. And we also talked about it on YouTube a couple days ago. Entering puts to hedge myself. It was as simple as that. No, I'm not going to make a fortune off this. I'm not laughing in your face. I'm not bragging or anything like that. It was a small amount, and it was just to hedge against shares, and this is exactly what I expected to happen. GameStop testing the weekly trigger, there was a very good chance we were going to break out to the upside. However, given the manipulation, given the anticipation for the earnings, the amount of eyes on it, it was easy to trap retail into calls, and it was just easy play in my opinion. Overall, guys, this is what happened with GameStop earnings. If you want to come over here and screenshot this, you can. Or if you want to just join the Discord so we can talk about it back and forth, make sure to do that. I also posted an AMC video earlier. So if you want any update about AMC or crypto or the overall market and GameStop, essentially, go watch that. This covers it completely. It covers it nice, and it tells you to get ready. And I'm going to reiterate that in tomorrow's video. So make sure to have post notifications on. The Discord link is the second link under the video and pinned in the top of comments. You guys are grandfathered in at this price. It's a coffee a month. You can come talk with me on the daily and the most amazing people who talk stocks as well as crypto and want to become financially free like yourselves. So get in here. It's well worth it. And we have options trading alerts. And as soon as I enter a trade in my personal portfolio, I drop it in there. So I think there's benefits to getting in. It is well worth it. And as we grow, this price will eventually go up. But as of right now, it's at $3.99 a month. Join, try it out. And this will pay for your Discord. Use the top link for Moomoo, open an account, and deposit $1. They're going to give you up to 15 free stocks, each valued up to $2,000 per stock. You'll likely earn $30 to a few $100 because myself and some family members doing it, this is the range where some of us have earned. So some are better. Either way, it's free money, and they're giving you 8.1% APY on your uninvested cash for 3 months and then 5.1% for the rest of the year, and a ton of other benefits like level 2 order book data, access to trading options, going long, going short, and more as a retail trader. Go check those links. They're under the video. Let me know what you think about this in the comments down below. Did you play puts? Did you play calls, or did you just watch it? And were you anticipating an earnings call? Were you trying to get in? What do you think about the forward guidance? What do you think about Ryan Cohen? What do you think about the earnings? I just want to hear your thoughts in the comments down below. But overall, that is it. Subscribe to the channel. I love you all. Lottery Stocks out.